Good morning. Good morning. It is a good morning. It's delicious, actually. Wasn't expecting that one, was you? Man, these glasses are amazing. I'm seeing so many more salty comments. This is great. This is awesome. I need these antagonistic individuals for my story arc. Like I need that. Okay, it can't all be people supporting me, right? Where's the fun in that? Just give me a second here. I gotta make sure I get my laptop plugged in here so we don't run out of power. I'm only going to be with you until around 9-ish, something like that today. Um, but I'll observe the non-farm payroll with you today. Just give me a second. I'll be on mute for a minute. Alrighty. Welcome back. Welcome back. It is your host, the ghost with the most. That's right. Good old ICT. Hope you're doing well. It is non-farm payroll Friday. Just about 8 minutes or so away from the carnival ride that most retail traders want to be a participant in. They want to ride the roller coaster. So I shared what I've been doing here. I was running something I outlined would unfold this week. If you go back and look at the reviews, the commentary, the things I was posting on my son's channel, and for the folks that don't know where my son's channel is on YouTube, I'm sharing every video link on my community tab on my YouTube channel. If you're following me on the app on your phone on YouTube, I know that on my older phone, I couldn't get the community tab section up on the cell phone, but you'd have to go to like a laptop or something that's a little bit bigger. I'm not sure why it does that, but the community tab is kind of like where I post things to. I don't use Twitter anymore. I don't use Facebook. I don't use Instagram. I'm not on any of those services, but I use my community post or tab on my YouTube channel as a way of kind of like a message board telling you what I'm getting ready to do, or just give you some kind of encouragement, or just needle the folks that need the little heat from ICT. So I realized while watching the playback for the editing, I didn't have the end dog on for today, so I'm gonna do that real quick before we get into the tomfoolery that is non-farm payroll. So on a 1 minute chart, there, and That's the 6 o'clock open right there. So that's going to be the low of the new day opening gap. And the close is that price there. So the high is the close at 459. And new day opening gap high. And then we'll move this small. And then all you gotta do is just change that to low. Quick, painless. Bada bing, bada boom. All right, and then scrub on over here. She's a bit up there, and it's the, look how it's overlapping with the August 13th daily fair value gap high. That's interesting. I don't know about that. Let's see what we get here. So when you're looking at non-farm payroll, okay, I'm not enticing you to try to trade this, okay? What I like to use it for is I want to see what type of liquidity they aim for, okay? Before we get into it, non-farm payroll is not algorithmic, okay? That is not algorithmic. It is the same logic that is used in the automated form, but non-farm payroll like FOMC is a manual intervention. That means they literally pick where they want it to go abruptly, just like that, okay? And you're encouraged not to try to trade it going into the non-farm payroll number. 20, 30 minutes after, or if you're really, really skilled, 15 minutes after, so 8:45 a.m. Eastern time, that's the earliest I would say that anyone should try to trade the non-farm payroll. Now, obviously, if you're already part of a trade and you're holding something, then it goes without saying that, you know, if you have taken something off, you can leave a little partial on to see if it gives you a little bit more juice out of that lemon. But you do not want to be trading this, okay? If I were to trade every single non-farm payroll event before the fact, in other words, if I was trying to position ahead of it, I would have terrible stats because I don't know where they're going to run it next. I don't know that. You aren't going to know that. Just like I don't know where they're going to take FOMC. I don't know where they're going to take CPI. I don't know where they're going to take PPI. They're all manual interventions. That means that you should not be trying to position yourself ahead of them. Wait for the initial shock. Once that big crash, you know, comes down into the marketplace where the shock and all hits it, look and see what is left behind. Like, where's the smooth edges? Because that's what they're going to go for next. Okay, so in the times that you're going to be wrong about that, okay, well, that's just one time you're wrong about it. It doesn't mean your career's over. All right, so we got about 2.5 minutes. Let's take a quick look at what we have here. Let's do it on a 15-minute time frame. And what I teach my students to do is, and before I close, I'll review the trade that I just did, my Yujiro Hanma trade. That's my Yujiro profile and model. I'm being facetious. It's just me doing my typical stuff. One shot, one kill. I told you the turtle soup, how it forms. Told you what to look for this week with the commentary on the daily chart. And some of you were surprised, like, how did that happen? Where did you get that information from? All right, so we are inside this SIBI here. And let's define it real quick. Here's your sell side. And some of you are going to be like, oh, well, you know, it's going to hit one of those levels, right? And the important factor is seeing which one they leave going into the 9:30 opening bell. And or do they leave it in place after the initial run for liquidity? And we will do that. Now we've had a nice drop this week, so it's reasonable for it to see a return back into some intermediate term buy side, especially with the non-farm payroll. Okay. So what I teach my students to do is frame out 15-minute highs and lows that are key. Relative equal highs, buy side. This one here, we do have, this, but I don't like that so much because we already hit this lower low. And we've already met the objective I had for this week, which was that August 13th daily fair value gap low. And you can go back and listen to my commentary, look at what I was explaining on Caleb's channel and the things I was mentioning during the live streams on this channel. We were looking for lower prices, and I wanted to see it get down into that 18,765.25 level. For the folks that said, you got two screens recording, just turn the trade on and go. You do it. You get in at the high. You get in at the high and you hold for the low. Do it on an execution. I don't care if it's a demo. Do it. Bet you can. Salty boys. All right, so here we got it. This is non-farm payroll. You want to trade that? You want to trade that? Woo! That's right, baby. Right to the buy side. I didn't like this one. This one's the one I liked. Now, if you think that you're going to trade these types of moves, if you think that's going to happen, and you're going to be able to get in there and they're just going to let you ride it, and you're going to get out, you're not even going to get out here. It's happening so fast, and your broker is not allowing you the execution. Every broker pulls their engagement because they know that people are going to do what? They're going to over leverage, just like everybody does with these funded accounts. They over leverage, they link 20 accounts, 30 accounts, or whatever the maximum is, and they go for broke. They try to trade as much as they can be allowed to do by the funded account company because they think it's the lottery. And they know they can't trade well, so they're just trying to get lucky on one big move. So when do they know markets move around a lot? Non-farm payroll, FOMC, CPI, PPI, and they gamble. So brokers know that. They know that. So they're going to pull the opportunity away from you. That's not a lack of liquidity for the sake of buying and selling. There's a lot of people want to buy and sell. I promise you, they all want to buy and sell. But your brokers collectively are not allowing them to do that. So that's why you have this illusion, okay, of lack of liquidity. They call it illiquidity, okay, or illiquid markets. Now, there's absolutely liquidity there, but the brokers are not going to allow themselves to see people go in and just run roughshod on them because some brokers B-book. And when they B-book, these same people that they're usually taking the money from, they might get lucky that day on a heavy-handed bet. And they're not opening themselves up. It's just like a casino. The house has the edge. They're not trying to let a card counter come in there and do what a card counter does. So what I like about the non-farm payroll is it gives me a clue sometimes, not all the time, where it may want to trade to at 9:30. Now, how can I use the information that's been presented here? This is kind of like what I'm teaching my students over the years where we're watching non-farm payroll. I'm not telling them what to do. Okay, nobody's trying to position ahead of it. But while we did have relative equal lows here, the fact that we took this low below that one, that already indicated that this one was more likely. That's why I said I don't like this one so much. This one is reasonable. Why? Because we've already traded down to that daily fair value gap low on August 13th. So it's reasonable for it to try to go back and run up against the trailed buy stops, which would be here. This is a 15-minute time frame. It's a bellwether time frame. So having like FOMC, PPI, CPI numbers, any kind of big high impact news driver event. I just realized I didn't check my audio. Crap. Ugh. Man, I'm just going to go with it. I'm trusting that you guys can hear me. I don't have my phone next to me either. Jeez, ICT, you're supposed to be a professional. Hold on one second. I have to make sure before I go in because I don't want to review that trade and then realize that I don't have the audit. So give me a minute, okay? Give me a second. Oh, here, Ross Cameron. Wow, the most comprehensive day trading course, according to Investopedia. Thanks, Ross. All right, so let's see. Yep, I hear myself jawboning now. Yep, 4 seconds delay. Very good, very good. All right, so anyway, back to this carnival-like atmosphere. The 15-minute time frame, okay, you really want to warm up to that time frame. That's the reason why I took Caleb's attention to. That's like his high time frame outside of a daily chart, obviously. His high time frame is not an hourly chart. It's not a 4-hour chart. It's just the 15-minute time frame. Then we can drop down to a 5-minute chart. Then you can drop down to a 1-minute chart or a sub 1-minute chart. And if we can appreciate the level of interest around stops that are above the marketplace or below the marketplace, the 15-minute does a really good job of highlighting where they're obviously going to be resting. Now, you don't need a book map. You don't need any kind of application or app. And I know there's some people out there that have created them and or are building new ones because there's a lot of interest around liquidity now because of the stuff coming out and the way I teach how to attack it. And it's framed in a way that seems mysterious. Okay. And sometimes, admittedly, I probably in the very early stages created this air of mystery around how liquidity is in the marketplace and how you have to seek it. But I've never been ambiguous about where it is. And I teach how to find it and how to look for it. And then based on how that liquidity is engaged, helps you frame out a narrative, helps you determine what the market's likely to do next. Because that's really what we want to do as a trader. We want to know where is the market going next and how can you be best positioned to capitalize on that change in price if it's moving higher or lower, and or avoid being wrong more times than not. So that's kind of like what the essence or pursuit of a trader is in managing the risks along the way. So a 15-minute time frame, Caleb, is your bellwether chart for determining where the obvious, clear pools of liquidity that the algorithm will refer to for that individual daily range. Okay, so what happens if I was going to keep this for the book, but I'll just drop it because I didn't do a live stream yesterday, so I'll give you a little bit extra today. What happens if you can frame a pool of liquidity like we did here? We outlined it real quick. Didn't take long, did it? Didn't take long. 15-minute relative equal highs here and this low here. And I mentioned the stark contrast was that this low was taken slightly lower than that one. And then going into the non-farm payroll, while these two may be viewed by someone else, they may say, well, look at this is relative equal lows. Because it's so close to that low here, if I ever see this one or something similar to this, that low being taken like that, it's already done enough to tip its hand saying, okay, at the time of that high impact news driver, FOMC, PPI, CPI, non-farm payroll like today, I'm going to elect to anticipate, let's say it that way, okay? Because I don't want you taking what I'm saying and saying, oh, he's giving me that secret nudge, nudge, and wink, wink to take a long trade when it doesn't. No, no. But it does encourage a new startup or a new student when they can see these big flash moves that take place, how you can anticipate where they're likely. You're not going to be right all the time. Okay, I'm not right all the time when it comes to these big events. Okay, I have to wait because I'm not going to put money up against something that's uncertain. Just as well as I mentioned that I didn't like this one here and this one was more favorable for a run for non-farm payroll, it could just as easily gone down, wipe this one, then one up there. Okay, so that's what I'm about to explain to you. If you can frame on your 15-minute time frame where the obvious pools of liquidity for buy side, which is here above relative equal highs, and the sell side below relative equal lows, if you can identify them both, and you should be able to do that over time by doing it every single day, this is what you should be doing also. Every section of your journal log entry, Caleb, it should have your 15-minute time frame annotating at the beginning of 9:30 where the 15-minute pools of liquidity are, because that's your bellwether on the daily range, because it's going to give you every piece of information that I'm going to help build on before we close this live stream out today when I review the trade I took yesterday that carried over into today. And no, it's not technically the 5th of September because the execution that closes the trade occurred today. So the live execution, it's not a profitable endeavor until the trade is closed, right? So the execution is September 6th, not the title of the video shouldn't be September 5th. So if we can frame the idea of buy side and sell side on a 15-minute time frame, what happens if the market at a high impact or maybe even a medium impact news driver on the economic calendar, like forexfactory.com, Econoday. I wonder if, I don't know, leave a comment in the post I just made on my community tab. And or if you're a private student, you know how to get a hold of me that way. Does TradingView have a calendar? Like I don't know, but if they don't have one, they should do one. But whatever economic calendar you use, you know, if it's one of the ones I just mentioned here, I interchangeably use two. Econoday is what I've been using since the 90s, and then you have the Forex Factory one, which I got used and accustomed to using when I was teaching primarily Forex. But you want to look for the medium or high impact news events. I don't care about the yellow or the very low impact news drivers. I don't care so much about the speeches. I do care about Fed chair. I do care about bond auctions. I do care about only the U.S. stuff. Now, if I'm trading Forex, which I don't know, I no longer trade Forex, and I know all of you are upset right now because you're like, you don't talk about Forex anymore. I hate you. You want to break up with me now. The same things I'm teaching here, they work in Forex. The problem is Forex right now is being strangled. Okay, there's so many things going on in the monetary system that there isn't a lot of big placement going on. So you need huge flows coming into those pairs, those currencies to create this disparity. And because the dollar's being basically demolished, everyone's trying to determine what's the best play going forward. And that's the reason why I backpedaled away from it, because we're going to see a big, huge, like a depegging what the euro and the Swiss franc was years ago. If you've never seen what that was, do a search on YouTube for documentaries about it, because brokerage firms, large institutions were completely wiped out instantly that day. So I know that that's coming. I don't know which currency it's going to be. It may be the dollar. It may be another currency. But everyone that's in Forex, when that happens, they're going to get crushed, immediately gone, dusted. And you're going to owe more money than you ever made in your life. Okay, because that's how it is. It's just like you're done. You'll be liquidated. You're a pink mist in the air, gone. So that's why I backpedaled back to commodities and futures trading. This is where I cut my teeth in 1992, November 5th, 1992. That's where I started. So while Forex was fun, Forex is not my thing anymore. Okay, so um, I'm glad that there's been this big shift away from Forex. And now folks that are wanting to be traders, they take their finances a little bit more serious. They're not in their gunslinging, trying to trade with $25 accounts and trying to turn them into $1,000 in a month. I mean, crazy stuff, crazy stuff, trading with fake brokers, basically. Okay, it's really what you're mostly doing with these Forex guys out there. When you're trading futures, you're trading a real market with real buying and selling interests. Okay, and billions of dollars are on the line, where it's a gentleman's market. Okay, and I say that because Forex, you're all going to get a different high, you're all going to get a different opening price, you're all going to get a different close because you're dealing with brokers that are given the freedom to screw you. In futures, everyone has the same high tick, everyone has the same low tick, and everyone has the same opening price and the same closing price. It's a level playing field. That's why professionals will trade this market over Forex. That's the reason why. When you afford a broker or the clearing firm that you're using to execute your trades on, you are signing the agreement when you open up an account that they can open and close and narrow the spread at any time they want. It's at their discretion when they're going to do it. And then you wonder why your take profit doesn't get hit or your stop gets hit, but then it runs. It's going to happen more times in Forex than it will happen in futures. Now, it doesn't mean that you can't be taken out and swiped with a stop hunt in futures. But the difference is, the contrast is, you were really wrong if it happens in futures. And that's good. You want to know if you're wrong, okay? But in Forex, you have this wide degree of disparity between all brokerage, and that to me is a little scammy, okay? So if they are going to cannibalize their own clientele, would you choose to trade in that? Would you rather swim in the pond full of crocodiles or get into a pond that's far enough that affords you the time to get the hell out of there? If that one single hippo is at the far end of it and you've been watching the whole time, that's what futures is. There's a hippo in this water, okay? And hippos, they kill more than crocodiles a year. But you got one shot, one chance to screw it up here in futures. In Forex, you have so many things that can go awry and go against you that are outside your control. You may not even see it happening or even understand that it's happening. So that's why I've migrated away from that, because now the climate is geopolitically primed for some major financial meltdown. And it's going to be in the currencies. The currencies are going to get crushed, and it's not going to be something that you can trade. Look at the Swissy and the Euro depegging, okay? And you'll see exactly what I'm talking about. It's 1 second it's there, and then it's immediate, the game over. Like it's game over instantaneously. Boom, it's gone. You don't have anything left. And literally brokerage firms, large institutions were completely crushed. So I'm answering this because I'm still getting questions why I'm not talking about Forex. Because if I talk about Forex, I know my influence is going to have people doing what? I want to trade Forex. I want to do what ICT is doing. I want to do this. I want to do that. I'm not in Forex. I don't have a penny in Forex. Zero, zilch, nada. No broker holds any money in Forex for me. None. Not one. In futures, you have reputable brokers. You have the same price. Everybody sees the same thing. It's a level playing field, and it's a professional gentleman's market. That means, yes, there's manipulation, but it's not like a wild, wild west like Forex is. Okay, and it's not likely to have the same thing happen to it, even if there is something in the currency market. There will be shockwaves in futures as a result of that, but I would be better equipped mentally and psychologically to weather any adversities while trading futures versus Forex. So there's your answer for everybody that's been asking. Why you keep talking about stuff and nobody asks you? You don't know who's asking me anything, bro. So we're back up into the opening gap. So isn't that beautiful? So we traded all the way back up to the buy side, which was favored over this because of that little tiny little tick below that. But what happens if it runs both sides ahead of 9:30. Like say for instance, it opened here at 8:30, it traded down, hit the sell side first, and then ran up, hit the buy side. If it would do that and then keep the range, whatever this, say that high right here, say stays intact, and then we march to 9:30, and it doesn't make a higher high, and it doesn't go below here. If it did both sides of, I'm sorry, I said that wrong. If it would have taken sell side first and then went up here and took the buy side, and that range that was defined by that stays intact all the way till 9:30. What that indicates is we have a 50-50 chance that the market's going to stay inside that range and not go down and take the low out again. But what happens if it does this? It fails to take out that sell side, takes out the buy side, and then doesn't rip and keep going and crushing speed going higher. Like if it just hangs around and creates a little bit like retracement back into the first fair value gap on Thursday, because that's what this blue line is here. I had to throw that little lipstick annotation on because I didn't want to create anything over here because the text wouldn't show up. So I had to type it in like that. So I had to make sure the recorded trade had everything on the chart. So I usually don't like to annotate it that way. But if it stays the way it is right here, and we didn't take out the sell side, it means that we could flirt with trying to make an attempt to go back down here, but I would expect it to fail. And then everybody would want to chase it going lower. And then they would do something that's like this after 9:30, going into 10 o'clock, 11:30, and then closing somewhere in the middle of the high end of the daily fair value gap on August 13th. So it gives you at least something to work with initially to frame some kind of a narrative. And I know what I just explained to you for the very, very brand new students that are coming to me. It's a little advanced, but it's okay because you're seeing me outline things day after day. And when I'm talking about the higher time frame charts, where the price should reach to, what should it gravitate to, over time being exposed to that, a lot of the questions that you have right now that you think are paramount, that you can't sleep unless you figure the answers out right now, I promise you, if you just write those questions down in your study journal, just relax. The days that you have those questions come up, write them down and leave space for the answer, because eventually when you get to another video that you watch by me or a live stream, I'll cover something. But obviously, there's so many of you that are watching. I know most of what you're going to ask me anyway, and most of those things are already answered in the old content that's on my YouTube channel. All the old lectures, they're not stale. They don't stop working because they're years old. All the stuff that I taught in 1996 they're still happening right now. And you're talking about the algo changing. Come on now. So 15-minute time frame, Caleb, is what you want to focus on. Early on, I expect Caleb to have the wrong buy side and sell side annotated. It's normal for that to happen. I want him to mess it up so that way I can show him what he's doing wrong and where the right one is. That way, if you're doing similar things, you will have that experience of, oh yeah, I probably was thinking the same thing, if you're even doing it at all. That's why it's important before you watch anything that appears on Caleb's channel, you do it first in your own charts, okay? Because that way it's like the same experience. By me showing you mine, I'll show you what my charts look like at the end of the day. This is my annotations. This is how you should have your charts marked up. These are the observations that you should have, in my opinion, based on what I believe you as the audience member, specifically Caleb, my son, you should be focusing on right now. It does not mean it encapsulates every possible thing that I've ever taught on. It just means that as a beginning basis point, like if you're brand new and you want to know how to start, this is how you start the 2024 mentorship, and then watch what I'm doing over on my son's channel. For the next couple of weeks, it'll be primarily me talking. And then because he's seen enough examples of it, he can ask me pertinent questions that are useful. Otherwise, right now, if I sit with him and he says, all right, Dad, what about this and what about that? They're infantile questions, and they're best suited to be answered just by going through the process of me watching, the next couple of weeks, reviewing, doing the screenshots for his journal. And then he's going to try to, in his best effort, try to replicate that on his own. and it probably won't be as clean and crisp and all, and it's going to get on my nerves because I'm OCD. But you are looking at those charts. What they are documenting are important to you. I'm watching this over here. So I'm looking at this little section of price action. See how we went down, up, and then now down. So there's this inefficiency right here. This is the only thing that I'm watching. If it really starts to make a move above that, then we'll probably be working towards a deeper retracement post 930. But right now, it traded right back up into that little area here. I don't think that is a reason to stop price going higher, but that's just something I'm watching as I was talking to you. So 15-minute time frame, there's your liquidity pools, and then you strip it down from the 15-minute time frame down into a 5-minute. And levels that would be defined on this time frame, they're considered minor buy side and sell side. Okay, so you have primary buy side and sell side on a 15-minute time frame, and that's going to give you your first parameters for framing out or fleshing out a narrative for the session and or the daily range. So one of the things I like watching in other live streamers and other YouTube channels that are very upfront, and they tell you what they believe, what they think, their opinions, and some of them are actually executing on them. I'm thankful that they're willing to do that because they create pools of liquidity in sentiment, and it allows them when they get on their YouTube channel. And this is not a knock against any individual YouTuber. I'm focusing on their audience because that's what I'm watching. All they're doing is creating another watering hole. So when I'm watching other YouTubers, it's a watering hole. Animals are going to go out to that watering hole and they're going to try to get a drink. And they're either chasing what this person's doing in their YouTube stream, which I don't ever, there's nobody out there I want to follow. Not one, okay? But I like watching my students, but I like watching specifically a number of YouTubers that have a decent following, and their animation around a particular bias for the day. If they think a certain level is going to be hit, and for instance, let's roll back in time. Let's just say right before 8:30, say it wasn't non-farm payroll, and we weren't going to have this fast run in price. The way I just framed out the sell side and the buy side, real time in front of you, I would have those same levels annotated the same way. It just means that it's likely to take a little bit longer to get to them because it's not a non-farm payroll, FOMC, CPI, or PPI type event driving price right to it. So because that resource that we have in YouTube, it allows the folks to have a chat window and whatever. By watching the sentiment shifting, and if I see another YouTube channel that I watch and I think that they have a very busy channel with chat, I love that. And I'm not engaging in their chat, but sometimes I'll throw a bone out there to try to get some kind of, like if it's real dry and nobody's really chatting up anything that gives me kind of sentiment reading, I'll make myself known in the chat. And then all of a sudden, Billy Big Ass, balls or whatever you want to call it, guy wants to show everybody he's smart. He'll say something. And then that's what I'm looking for. I want the Joker to raise his head up. Because as soon as he does that, somebody else is either going to say, no, I don't think that's going to happen. And then a wave of other people saying, yeah, you're right, that's not right. Or they'll support him. That's me manipulating that chat room. Okay, I'm creating some fluctuation because I have to create a disturbance. I'm acting like a Judas. So I want their opinion. If I see predominantly most of the people that I'm watching, sentiment-wise, if they're saying they think it's going to go down, and I'm already seeing things like this low went lower than that one, and this one is relatively equal. See, there's this high here didn't go above that high, even though these could be framed, if you're looking at it that way, that would be a relative equal high. But this is high probability. Why? Because this high is lower than that one. Go back to what I was teaching you in the 2024 content so far. So this high over here is lower than that one. But you don't have that here, do you? You have this lower, and then you got this one over here, where it's just like, it's already disturbed it. It's disturbed that liquidity. Where here, it's a little bit more blocky looking, where this is a wick. If this wick gets overtaken, like it does here, that means it took a real run on liquidity versus like how I treat a wick. I'll break that down into quadrants and more specifically the halfway point. If I see a wick like this and we're above it, I want to see it trade down into the upper half of it, but not even go below the midpoint of it. But in this leg lower, it passed through that easily and spent time down there. What was it doing? It was accumulating. So you don't have those signatures up here. It's more blocky. So that makes this a better candidate for a high impact or a medium impact news driver, drawing to that. But if it's not a if it's not a high impact news event like the PPI number that comes out, the CPI number, if a FOMC rate announcement comes out in the afternoon, 2:30 in the conference call, and then you have like a non-farm payroll event here, excluding them, everything else, if it's on economic calendar with a medium impact, I would expect that same type of thing unfolding here. It just would be a gradual trading up to that level for the buy side. Does that make sense? I know you can't answer me, but it's affording me the moment where I framed where the liquidity is, and then I'm actually getting a dynamic sentiment reading by people that have a vested interest in looking right on social media. Think about that. If they're going into these chat rooms and they're trying to voice their opinion, it doesn't matter if they're right or wrong. Okay, that's not my point. The point is they're willing to toss it out there in the ether, and I want to see how much traction it gains by anyone else in that chat room. That's how I'm using other YouTubers' streams. And if they start cheerleading the idea, oh yeah, I like that idea, but my target's a little bit past that. That's exactly what I want to hear. I want to hear that stuff like this. Yeah, I want to see it go below that low here. I want to aim for 18,680, and then somebody else will come behind and say, no, I'm looking for 660, bro. That's exactly what I'm looking for, because now I'm arm wrestling them as smart money against dumb money, street money. Okay. I'm not saying everybody in everybody else's live stream is dumb money. I'm just the ones that are acting that way when I'm expecting this low not to be taken and this area here to be drawn to. What you have at that very moment is the purest form of sentiment at a very specific time where it's diametrically opposed to what the algorithm's going to do. Who do you think is going to win that? Who do you think is going to win that, right? Come on now, you know the answer. Dumb money is going to fall on the sword of smart money, okay? And when we can see these tug of wars, these wars, if you will, between someone that's not informed, that are just impulsively trying to share an opinion for the purpose of looking right. Smart money is not trying to be right. Smart money is out there decapitating other large entities. That's what they're doing. That's what they do. The algorithm just delivers price. Smart money engages with that algorithm with their own high frequency trading algorithms or discretionary trading, but they use the logic that I'm showing you here. So banks do not trade with what I'm showing you here. There's an entity outside of that, okay? It's outside of that. They're not Goldman Sachs, because Goldman Sachs tells you you can't trade in time to market. Well, they're really stuck with what I just did today. 2, I'm doing it every single day, proving where the market's going to go next. And does it look like noise to you? Does it feel like you're confused as to, oh, it's too much noise going on in these time frames? No, it's clarity, right? And it's encouraging. It encourages you to be able to say, hey, if this guy can do it, and he used to deliver pizza, come on, man, I can do this if I apply myself. You just got to give yourself some more time and effort. So if the 15-minute time frame buy side and sell side liquidity pools are defined, it gives you an initial context. And I will counsel you, and the live streamers will appreciate you by watching their streams too, because they'll get more views. But every big name YouTuber that follows the futures market, my advice is quietly, respectfully, in anonymity, start watching their chat windows. Because I'm using that as the best sentiment indicator, because I know what I'm looking for technically. I'm looking for something to take place, to draw to a specific price level, to behave a certain way. And I have made that known to you. since we started doing this mentorship. I told you every step of the way what I'm looking for. I'm using higher time frame charts to tell you what I think narrative wise, but intraday I can trade both sides. It's not a problem to do that. But if we're looking for that low on August 13th on the fair value gap, which I'll take you up to the chart in a second, that was where I wanted to see it trade down to this week. Once it hits that, I'm done. I'm not personally looking for anything lower. Can it go lower? Absolutely can, but I'm not going to be on that. Why? Because I'm sailing into the weekend. I'm done. I'm letting everybody else out here fight on non-farm payroll Friday to find something to make money on. When I just destroyed it, Godzilla's the atomic breath, boom, gone, nuclear waste now. And everybody else is trying to find scraps to eat. I'm out the door. I'm outie. I've already done enough damage. I don't need to do anything else. So I'm walking back out to the ocean, find myself in my Godzilla lair, right? So I know it's always some kind of movie analogy. That's how my brain works, man. So when we drop down from a 15-minute time frame to a 5-minute chart, then you start seeing smaller pools of liquidity. And what would that look like? Well, inside of this low and this high, that's your range. So if we think by dividing up the characteristics that the buy side liquidity pool has in contrast to with the sell side, the fact that this wick was overtaken, that to me is more indicative of this was a real stop hunt versus this blockiness. Okay, it's just real smooth compared to this. Would you agree? This is a little bit more jagged, more piercing versus all of this blockiness. So this is more likely to be drawn to on the basis of just the way the price printed it. Then you add to it, what day of the week is it? It's Friday. What direction primarily has this week been doing? Has it been going up all week? Has it been going down all week? Clearly, it's been going down all week. We had a big old Tuesday drop down. Okay, the first part of the morning. I wasn't part of that, but I smashed it in the afternoon. And then you watch what I did yesterday into today. So I don't need to be in there every day. I know how to catch up. I know how to fill in the gaps of days where I wasn't participating in because I will let the market tell me what it wants to do. I want the setups to come to me, as I'll indicate when we break down that trade. But you have to look at price and discern when you're going to engage, when you're not going to engage. And once you have that 15-minute time frame defined, this is your dealing range. This is your high, and this is your low. What is the daily range and or specifically, what's the morning session going to do with that range? Is it going to stay inside of it? Or is it going to trade just outside the low of it? Or is it going to trade just outside the high of it? Is it going to run both sides first? And if it's going to run both sides, which side does it run first? In this case, it ran to the buy side. But it stacks the odds against this being a prolonged move lower for me personally because it's Friday. It's fulfilled my high time frame daily objective by going into that August 13th daily low fair value gap low. And that sounds like a whole lot of mumbo jumbo, but when we go back to the daily chart, you're going to see exactly what I'm talking about. And it's going to make perfect sense. But this isn't going to be a long video, so it's going to be easy for you to watch a few times to get the notes from it. After the 15-minute time frame is defined, where you have both buy side and sell side, dropping down to a 5-minute chart, then you can start looking at things like this, where this is a high, slightly lower high. So these are relatively equal. You might not see it that way. That's what I'm teaching my son to view it as. So buy side is defined with this high here. What kind of high would that be? What kind of buy side specifically would that be? A minor buy side liquidity pool. So you'd annotate it like this. I already have presets, and I know it drives you nuts. You save so much time. I'm teaching. I'm not trying to save time. I'm teaching. You want your brain surgeon to go through the cliff notes and then you want to be doing brain surgery on you? No thanks, brother. I'm not doing that. I want the person that went through all of it the right way. So this way it helps teach how people are to annotate because there's always new students coming in. Top, left, and I like 14 or 16 depending on what the chart looks like. That's good for now. So this is a minor buy side liquidity pool. Okay, and then we have again right in here. See these? So that same thing. So you can highlight, not the edge of it, to highlight the line, hold down Control, drag your mouse away from it, and it'll copy it. And then you just put it on the higher of the two highs and extend that over. Okay, so you have a primary sell side liquidity pool, a primary buy side liquidity pool. What makes it primary? It's a 15-minute time frame dealing range. So that way it tells you what you are going to frame your session and or daily range around initially, because you have to have a starting point, right? Where do I start ICT? Where do I start looking? This is what you start with, okay? But that 5-minute chart will break down that range from this high down to that low into smaller buy side and sell side liquidity pools. So what are we seeing here inside this range? Primarily it's buy side. Okay, we have a lower run here below a wick, so that means this is a little bit more jagged. It's Friday. It's been going down all week. So which side is non-farm payroll most likely? Not all the time. Not a panacea. Not a be-all, end-all. It's always going to work this way because ICT said so. This is my protocol. This is what I teach my students to look at price like this, to anticipate where the market is likely to go. I do the same thing with PPI and CPI. And I sometimes, and I'm talking about maybe 2% of the time, get it right. But 98% of the time, I'm wrong on CPI and PPI numbers, initial delivery like this. So I'm trying to remind you, don't think that you're going to walk out there like John Wayne and be like, it's over. You know, the Duke's here and I own all this stuff now. This is my show. There's a new sheriff in town. You ain't going to be able to pull that off. Okay, it's not going to happen, because if it could be done, I'd be doing it. And I'm not able to do it because no one knows what they're going to do with that information. That information may be technically viewed historically as a positive, but they sink it aggressively lower. And then they'll make the excuse later on, well, you know, they priced in, you should have known better. They didn't have any articles saying that they were expecting that, but there's always some excuse in the news feeds that it was priced in. Traders priced in this and come on. If it ain't something you're going to tell me in advance, don't talk about it. Don't talk about it, okay? So I don't care about what the raw data is. I don't care what the job number is. I don't care how many jobs are lost or created. I don't care about that stuff, okay? Because they're all lies anyway. Everything about those data points, every single one of them are all fake. They're all meant to stimulate the pockets of investors and large institutions. That's what they're there for, okay? So it's like an illusion. It's a reason for you to have some other excuse to get in here and risk more of your money. That's what it is. So because I think about it like that, I don't go in with trying to decipher the fundamental aspects of it, because fundamentals have left the chat a long, long time ago. A long time ago. As soon as we left the 90s, fundamental analysis is now a joke because there's so much lies built into it. You can't trust it. So it goes right back to where I started as a technical trader. The chart's going to tell you everything. Everything. So if we start looking at that range and we see there's a buy side here, there's a buy side here in a 5-minute chart, we can see how these are treated in the realm of how far we're going to reach back to that buy side, because we already determined that that's more likely, and you heard me say that before the non-farm payroll number releases. How we trade at that first minor buy side, that's going to give you a clue, okay? It trades up to it here, and then watch what it does. Jams down. What's that doing? Taking out that short-term low, but it is not going below that low here. So as soon as this candle closes there, this one here is the next one that is considered. It trades above it, right back down in, and then rips through the buy side. You cannot trade this on non-farm payroll release. You can't. You're not going to get filled, or you're going to get slipped so bad. What is slippage? Slippage is you trying to buy it at, say, 18,845, and you get filled at 18,862 or higher. But you want to have a stop loss somewhere down here. You now just were filled at a very unfavorable place, and now your risk is incurred in a much larger capacity than you initially wanted to take on. If you even get a fill, you may not even get filled. I have tried very, very hard to try to be a cowboy in this individual day. And you would get requoted, requote. You're buying. You're trying to buy it at the market. Buy. Requote. They're just keeping you from getting in. That's all that is, okay? There's a lot of people out there that want to buy, but the brokers are stifling that. That's why as soon as I see somebody out there, they have 50 contracts of gold or US 500 or US 100, okay, and they're showing they got 50 contracts or 50 lots, 50 lots, 50, and they show little MT4 screenshots, and they're putting it up on the screen, and there's a whole wall of that, and it's always after the fact, and they're all up like 12,000, 15,000 each one of them. They did not get filled on that. It did not happen. Okay. I promise you that did not happen. But they trick themselves by doing that because it gives them a dopamine hit and it tells them subconsciously. Think about what you're going. You've probably done this stuff. Showing social media what you did right, gambling without real money behind it and no logic behind it. You want the feeling of someone looking up to you. So what are you doing subconsciously? You're saying you're a scammer, you're a fraud, but I feel good about doing it because the social media response that's given to me because I lay them breadcrumbs out there. What are they going to do? They're going to fluff you up, and that's going to keep you from doing what? The work of actually learning how to do this. It's far more easier for other people to entertain themselves because they know deep down inside they're not really trying to learn how to do this. They're not here to learn. Not all of you listening are here to learn. You hear something, you want to hear something so you can go into social media and talk about it and troll and be funny. But you're still going to work next Monday. You're going there. Okay. Maybe you're working throughout the weekend with your second job. You got to do what you got to do. But I'm trying to teach you how to avoid having to do that. Even if you don't like me, you don't have to like me, but just sit down and take notes because the things that I'm teaching are going to help you formulate an idea of how to attack price action and how to avoid certain instances where everybody else is going to rush. They want to rush in here and capture these types of moves. I don't need that. Look what I just did. I don't need this day. I don't need to do that. I don't need a day trade. I can swing trade. I can position trade and get an extreme level high, an extreme level low, and be content with that. And that could have been my entire trade for the entire week and never done anything else. And that's how I was trading when I was trading Forex. I would look for those types of setups. I wasn't in there trying to do every little 15-minute movement. I don't care about that. You can do that. If that's what you want to do, you can do that. But that's not my cup of tea. I don't like that. I want to be in there where I know I have the largest magnitude of the move on side that I'm trading on. And it's very forgiving because that means if I'm using precision elements to get me into a trade and I'm trading at the highest level where this move can start trading lower from, and I'm going to show you how I did that, okay? It allows me to sleep. It allows me to eat. When I was younger, I couldn't even eat when I was in a trade. My stomach would be in a knot. Like I was in constant anxiety, constant stress, heart rate crazy high, like blood pressure, I'm sure was off the chart. But I wasn't looking at those biometrics back then. I was just wanting just to survive the trade, let alone make money. I just want to survive. Can I just be in this trade a little bit longer than the last one? That's how it was when I was 20 years old. And you probably have that same feeling right now. But what changes over time is you start figuring out what is the better setups. And you're going to see that these better setups, they're not an everyday setup. They're not an everyday circumstance. There's one or two, maybe 3 a week. And I'm talking very few times where a one shot, one kill scenario where you get in, that's what the OSOK is on my title of the video I just posted. One shot, one kill. That's a sniper euphemism. It means they don't have a whole bag of bullets when they're out in the field. They have a very low amount of ammunition on them because they have to crawl around a lot. They got to carry everything with them. And they're out there to take very surgical strikes. And my mindset as a trader is I don't want to go out there with a machine gun and just start spraying everything and say, okay, what fell? What did I get? Let's go see who I hit. That's not how you want to trade. But everybody does that. Everybody that starts out does that. The first time you go on tilt, that's exactly what you're doing. You put down your rifle and you say, you know what? I need my AK for this. And that's it. You just emptied your magazine and you may not have hit anything, but you wasted everything that's in your magazine. You have no more ammunition. It's gone. And now you're defenseless. And then the market rolls over top of you. Well, a sniper's mentality is he or she goes out into the field and that's the week of the trading. And you're looking for these very specific conditions where the mark that is your setup in price action, the thing that you're going to trade on, the things that make a buy or sell for you, that's your premium rate. That's your little fair value gap. That's your little scope. You don't care what's going on. You don't care about everybody else walking around. You're there to take out that one individual target. And that target is when price steps into that fair value gap. As soon as that price hits the consequent encroachment or starts to approach it, it's in your crosshairs and you're bullish. That means you're going to do what? You're going to take a deep breath, exhale. Then you stop. You don't inhale. You leave your lungs empty. Why do snipers and why do shooters do that? Because you're not moving around. And a small little movement in your scope is a whole lot of movement downrange. So you're exhaling, you're relaxing. You're not talking while you're entering the trade. Exhale, deep. Pause. When price enters that fair value gap, you fire. Your stop gets placed below the imbalance candle if it's a bullish fair value gap, or above the high of the imbalance candle if it's a bearish fair value gap. Then you relax. You don't do anything. You don't want to do anything extra. Just sit there. You don't go on social media and say, I just bought. A sniper does not announce where they're at. They take one shot and they sit still because they don't want the enemy to get a vector on where they're at. And you want me to go out here and trade. Oh, trade in front of me. Do your $100,000 trade in front of me. And do what? Let them come for me? Because that's exactly what I do. Everybody would be doing the same thing I'm doing. Now everybody wants to do it. Please let me copy your trades. My question is this. If I was to do this, okay, CEOs of all the funded account companies, listen, this is for you, okay? Every single one of you funded account company CEOs, Michael Patak, I don't know the other guys. What if I created a lottery system where I took 10 individuals that in an anonymous setting, because you're not going to see me ever go into a funded account company. You'll never get my socials. You'll never get my stuff like that. It's never going to happen. I would never allow that to happen. But what happens if I created a secret lottery where 10 people get to trade copy a demo account that I'm running, and they're copying 20 accounts? How much time do you think that your firm would be able to weather that? Because if I can show that I can do this just once a week, that's $2 million per. That's $20 million a week drained. What happens if I did that with 50 lucky contestants, free of charge, not charging anything? What do you think would happen to the funded account prop firm company? What do you think about that model? Think it would hold up to something like that? You really want me to do that? You want to watch me burn it all down? Is that what you really want me to do? Come on now. You have no idea who I am. You have no idea what I'm capable of. Like, you talk smack all the time, you CEOs on Twitter. Oh, but this guy can burn your whole shit down. You don't even know where I'm coming from. You have no idea who I could bring out there. And if you don't pay them, you're getting shut down. Nobody's going to do business with you. So stop trolling me. You put a spotlight on you, I will burn you like the sun. Stop it. It's not going to get you anything but trouble. Everybody's like sending me an email right now. Please let me be the one. What do I got to do to win the It's the Wonka golden ticket. He's going to train. He's going to let people train. I would never do that. I'm saying facetiously. Think about it. Like, think about that. I got people in my chat window all the time, or not chat window, but chat section or comment section, saying you can't trade this way. You can't do this. You can't do that. I literally gave you the game plan this week. I gave you the game plan. And I went past my time, didn't I? That's because I'm making up for yesterday's not having a live stream. And I got new glasses, and it's awesome. I can see it. So we're at the top of that inefficiency I mentioned over here earlier. Right here. And then we have these relative equal highs here. So that would be, we'll borrow this one and just change it. The name and logo. Yeah, can you imagine? 20 contracts with XYZ funded account company, all linked together. That's $2 million. And you're telling me Let me ask you a question, okay? I want to make sure I understand this correctly, okay? However I was to drive it, whether I was using a proxy, someone else, they're trading it, but they're copying me technically. What you're saying to me, if I understand this correctly, is I could theoretically have 20 accounts linked to one account, and all I got to do is what I do every single week anyway, and it's not causing me any kind of extra work. But the person that has the 20 accounts linked together, and I'm doing trades with $100,000, or I'm clearing $25,000 to $30,000 per trade. That's just one session. That's not me trading the London session, the morning session in New York. That's not me trading London close. That's not me trading the London lunch. That's not me trading the afternoon lunch in New York. That's not me trading the afternoon session and PM session. That's not me just trading the last trading hour. That's not me trading Asia just to throw a little bit more spice in it. You're telling me that I could literally go out there and drain these prop firms for $8 to $10 million every 10 days? Every 10 days? And you think they're going to keep paying that out? Man, I'm enticed. I'm genuinely, if I understand that correct, if that's what you're telling me, if that's what you're telling me that I could do theoretically, because I got the numbers, I can pull it, I can do that. But you're telling me that I could theoretically allow someone else to copy an account that I'm driving. You won't know it's me, but this person, whoever that might be, could be a cousin, could be a high school friend of mine, could be any one of you listening. They could be in a position where they are able to say, I want my money now. In 10 days, I can make someone a multimillionaire. Is that what you're telling me? Leave a comment in the section if I have that figured out the correct way. If that's what you're telling me, I absolutely am inviting any CEO of a prop firm to email me at innercircletrader@gmail.com, because I want you to confirm what I just said. If that's what my understanding is, if it's correct, oh, it's coming. Oh, it's coming. It is coming. I don't have to do it long. In 1 month, I can make a multi-millionaire. And that tax treatment is way better than trading with live funds. It's not the same. It is not the same. So, oh, okay. Okay, ICT has entered the chat with prop firm stuff. I'm not going to sign up. I'm not personally going to do that. I'm not going to give you my social. I'm not going to give you all those things like that. No. But I can create a proxy. How are you going to know who I'm putting in there? You won't. You'll know by the numbers. And I don't want anything for it. I don't want nothing for it. I just want to sit back and watch it. I want to watch it. I would love it. I'll go back to Twitter after that. Oh man, you're gonna burn. Troll me, motherfucker. Oh, it's good. It's so delicious. Oh man, can you tell I missed you yesterday? Can you tell? Yeah, I know you can. But anyway, prop firms are like, all right, look, we got to start looking for anybody that's trading 15 contracts, starting with 6. If they start with 6 contracts and they go in 4, ban them. We got to keep everything's got to just keep them from getting their payout. Disrupt their connection. ICT, you broke everything. You're a jerk. That's all. You would all say that. One of them's calling me right now. Come on, right now, you're killing my business. Don't call me when I'm live streaming. So, anyway, we're a couple minutes away from the opening. Let's watch the first couple minutes of the opening bell, and then I'll review the trade I did, and then we'll close it and go into the weekend. Please, ICT, let me be the one. All right, so what we have, and again, this is what I was saying to you many times before, and it's repetitive, I know, but I don't personally like to have these things on my chart because this is the busiest my charts have ever looked. And it's because I have to show you as students what I have written down on my notepad. For instance, when I was mentioning this over here, real time looking at it, I'm going to my pad. This is my notepad. Just a simple little yellow notepad. You can buy them from, where did I get mine from? Costco. And you get like 12 of them in a bundle. And they're about, I don't know, 5x9, something like that. And I simply just write down key levels. And what I do is I look at the previous day's high and the previous day's low, and then I layer every level that's pertinent to that range and just below it or just above it. And I have it in raw numerical format, just like that. But as soon as I mention this here, I'm scribbling in my observations on that level, what time frame I noticed it on. Okay. And then what I'm constantly doing is I'm looking at price over here. I'm watching this over here, this raw number, more than I'm watching the chart over here. The chart is the language that you're learning from me talking about what price should do. I'm not going to be able to bridge the gap by teaching you how to trade price without a chart. I can't do that. I don't know how to do that. I don't know how to articulate that in a way where it's going to be understandable. But that's essentially what I'm doing. When I'm looking at price action, I'm showing you things that form in price around the same time, around the same price that these other things occur algorithmically. So when they agree, you should arrive at that assumption about what price should do or how it should behave or how you should observe it at that moment or any given time frame. Okay, so that's the exchange of information and the language that I use by doing so. I'm more concerned about what price is doing at what time, and every time it's fluctuating up and down in relationship to these raw numbers on this same price axis. I don't need any of this stuff over here. This just affords me a way to communicate and talk to you. That way you can see things that may or may not repeat. So because it's Friday, I'd like to see it run up in here and take that buy side. It doesn't need to do it right out the gate, but that's something that is reasonable. And then you have this inefficiency down here where the consequent encroachment of that August 13th daily fair value gap, which we're going to look at in just 2 or 3 more minutes. Man, I bet your social media is buzzing right now. ICT is going to let other people copy his account. And then they're going to sell that. They're going to have a business for 2-3 weeks. Okay, I'm selling seats. Okay, it's $3,000, $5,000. It's $10,000 if you want to copy ICT. You can't tell anybody. It'll be in my email box immediately. Here, are you looking? I'm looking to narc this guy. Okay, he's doing this, he's doing that, right? Oh man. I'm not using your cup today. It was a rush to get out there and grab a bottle of water. So sorry, Daniel. I've used it by the poolside the other day though. He sent me a Yeti mug in the mail because he hears me bitch about how this crackling bottle of water always makes a sound in my recordings. All right, so anyway, we went through the business of picking out why that buy side is here, and we've opened up, and let's look at the opening range. All right, so we have a little bit of an opening range gap still here. Let's borrow that line. That works out pretty good, doesn't it? That's convenient. Let's put it right on the close. So we're showing the previous close, and that's not actually right. Let's go into a 1 minute chart. Sorry. You anchor on your 1 minute chart and your opening price on your first print at 9:30. So you have a little bit of portion of it opened up here. So it tried to get up in there, wait for the open, but left this little portion open here. Watch this low, and we're back inside of, I think it's September 4th. First fair value gap. Or is that third? I can't remember now. I took the annotation off. electronic trading hours. All right, so we're inside this little tiny inefficiency here. And previous settlements up here. These live streams are so much fun. Should have been doing it sooner, ICT. No, I would never got anything done. All right, so I can take this one off. We don't need that anymore. We don't need this anymore. We don't need that buy side anymore. We don't need the miners anymore here. Actually, we do. I didn't drop down to it when I was talking about the miner. 5-minute buy side liquidity pool and sell side liquidity pools. You can see how when we drop down to the 1-minute time frame, which is, I like using the 1 minute because it's very, very detail oriented. Okay, think about like remember when Bob Ross, the Afro white guy that would do his oil painting and whatnot, he would talk to you real mellow, put you to sleep, be like you're ate an edible and you're just chilling out watching this guy paint. Well, you're looking at this this time frame. Your daily chart is like a paint roller. Okay, it's applying a lot of paint, a lot of price action. Your 15-minute time frame is like your 2.5 inch or 2-inch paintbrush. It's not as wide as a paint roller, but it's not a fine tipped brush. Then you have an inch brush on your 5-minute chart, and then you have that really small detail oriented paintbrush for the 1 minute. Really fine, little etching here, little line work here in your painting. That's what the 1-minute chart does. It affords you to get down to the nooks and crannies of the fine details of price delivery. So if I'm looking at that same level here that was arrived at on the 5-minute chart with these relative equal highs, when price ran through that, let's look at it in contrast on the 5-minute chart real quick. Here it goes. It rips through it one single time on that one candle right there. You see that? Let me widen it up a little bit. So you don't really have a chance to see much in this one single candlestick unless you're watching the fluctuations of price over here, which is what I'm primarily doing when I'm watching price. Here, let me say it this way. Don't try to do this part. What I'm trying to describe to you, what I'm doing, that is me having more insight than you have, and I'm not going to teach all that. You are properly learning how to do this by watching what price is doing, because there are times, as I indicated many times before, where price is using my PD arrays, and if you have a bias that's bullish or bearish, you're going to have the next best thing to what I see that I can't teach you. And there's no other way for me to say it than just that, okay? My students are making money with it. They're learning how to do it consistently. If they're not trading with real money yet or funded account companies that has been now getting profits out of it, they're all graduating in their understanding and being able to read this stuff real time. And it's based on the stuff I'm teaching. But this 5-minute candlestick only has this one single range here when it crosses above that level here. But watch what happens when we go back into the 1-minute chart. This candlestick does that business of wicking around, but look what happens next. We trade right back down to that buy side level over here. Right in here. Using it, and then comes back to the order block right there. Now, you're not going to get that fill right there, because they may not have opened up trading for you on your brokerage firm. I have experienced this before. I experienced it when I was trading Forex. I experienced it with FXCM. I experienced it with, well, I'm not going to sit here and name brokers because it's going to sound like I'm advertising, but FXCM is trash. To say, in case you're wondering if that's a good broker, it's trash. FXCM was trash. I didn't like them when I used them, and I'm glad they got kicked out of the US. Boom, there you go, I said it again. But you won't get these types of fills. Now, if this was like
20 minutes after non-farm payroll releases, and you see it trade back down, something like that, then yeah, you can get filled plus the tick. So it's this opening price here plus 1 tick. You had a limit order, you're going to get filled on that, but you're not going to get filled on non-farm payroll the first 3 minutes or so. It's just expect that it ain't going to happen. So what that does is it completely removes the necessity for you to feel like you got to be a part of it. So what do you do then? Take a step back and then read what it's telling us. What's price trying to indicate to us? It defended initially what? The sell side. It's more likely it's going to draw up into take out buy side. Okay. But it left the sell side. So it is, for me, for my personal taste, I wouldn't want to take a short reaching for the sell side on that 15-minute time frame. Allergies are kicking in. So below these lows here, that sell side hasn't been engaged yet. I'm not interested in taking that trade because what I had set up for as a downside objective was already arrived at, and you saw me execute on that. So when that daily fair value got low, was traded to, I'm no longer interested in being a participant in this weekly candle. I'm done. It expired for me. I'll miss moves if it keeps going lower. That's okay. Look. If you aren't content with finding setups that could yield you 100,000 in one entry, you're never going to be satisfied. You have to be satisfied with getting 5 handles in the S&P consistently. You got to be content with getting 10 to 15 handles in the NASDAQ consistently. You have to start there. If you can't start there and bloom where you're planted, you're never going to make these big sizable gains that you're trying to make or aspire to. You have to have very small little modular goals in the beginning. And that's good to have them. Very, very small, humbling beginnings. Like you want to have a humble beginning when you start this. If you start off right out the gate with, everything's got to be a dopamine hit, you're increasing the difficulty level beyond all measure. Like you can't even imagine how hard it's going to be for you until you start realizing it and doing it. So let's go into what we're going to do here. Let's go into, I'm in a 1 minute chart. I'm trying to think. I want to show it to you with a naked chart. And I'm running the risk of getting rid of all my annotations. So let's do it like this. Let's go scorched earth. Okay. So we are looking at price action negative. Naked. And if we look at this indicator is this right here. Let me hide that. Thank you again, Flux. But the daily chart. Let's go to a daily chart, and we'll flesh out what good old ICT got lucky with. Apparently, I was running recordings on 15 different laptops, which I don't own 15 laptops. I'm recording multiple screens, but I got lucky to get in at the high and out at the low. That's impressive. All right, so if you recall what I outlined on the daily chart for NQ last week and going into this week, you'll see that in the live streams. You'll see that also in the markups and the screenshots that I was teaching Caleb to do. If you watch it on his channel is at official Caleb Huddleston, all together. Make sure you're spelling it correctly because there's people out there using lowercase letters and uppercase letters to trick you into thinking that's what it is. He's got over 20-some thousand followers as of right now. But again, the easiest way to do it is go on my community tab on my YouTube channel, and you'll see me actually linking and posting the videos that are being hosted on his channel. Okay. And I'll flesh this out real quick for you again, so that way you can see it. I mentioned how we were likely to trade down into this fair value gap for the week. That's what I wanted to see happen this week. Okay. So because we have that, let's do it this way. You want to annotate that level because it's going to give you your price level over here on the price axis. And we will do it like this. And then the same thing, hold down control, drag it up, and you can get that. So that way we're highlighting this candlestick on August 14th, Wednesday, 2024. That candle's low. And the high on candlestick of August 12th, it's a Monday. So that high and this candle's low. And this one single candle, see this right here? That little fluctuation between this candle's high and that following candle's low, that area right there, that is a fair value gap. It's a buy side imbalance, sell side inefficiency. That means for the market to efficiently deliver fair value pricing. It's one of those textbooks definitions, right, Hannah? This buy side imbalance, sell side inefficiency is lacking what? Efficient delivery on the downside. That means sell side delivery. Okay, so for every range that goes up, an efficient delivery model is the price has to be offered going back down the same range. That's what a fair value gap is. Okay, anybody tells you anything other than that, they're literally making stuff up. They have no idea what they're talking about. They're certainly not going to execute like you're seeing me execute or define it beforehand. They'll always talk about it after it was already a fair value gap. This one here was outlined to you in advance, and I told you that I was looking for that as a downside objective this week. Notice what goes on beyond that candlestick's high to the left. Look over to the left. What do you see? Well, the first candle is this one here, the body in that. So you have a volume imbalance down here. So let's play devil's advocate for a second. If price wants to go lower, maybe it goes lower today. I won't be on board with it. I'm done. When I'm done this live stream, I don't have to edit anything. I love live streaming for that reason, because it is what it is. What I said. I don't have to go in and edit. Like, it took a lot for me to edit that 18 hours of recorded session to get it down to a time limit, so that way it's palatable. I'm not going to try to take any more trades today. I'm going to relax. I'm going to do things around the house. This volume imbalance would be the next draw on liquidity that goes below the consequent encroachment of this wick. So you would define the range like this. Let me make it a little bigger like that. So where we're at right now in price, we're up here. Half of that wick, that's consequent encroachment. Look how close we got to it. The volume imbalance down here is the next one. I started with my allergies yesterday and all this laughing. It's stirred up even more, so I'm a little congested. But then you have this wick, you would do the same thing, and that basically lays inside of this volume imbalance. And then the same thing here. And the same thing with these wicks, all these discount wicks, you want to annotate those. Those are levels that I'm going to have on my notepad should we get below this on a closing basis. This being this candlestick's high, which forms this fair value gap. So as we start to trade down, this is a lot of balanced price range. What makes it balanced price range? It's offering sell side delivery. It means any movement, like when it drops like this is sell side delivery. This candlestick's close up is buy side delivery. It just simply means that the market has gone up or down. It's going up to go into inefficiencies above market price, or it's going up to take out buy side liquidity. That means buy stops, or trigger pending orders to buy on a stop for a new position, or to trigger buy stops that are protecting, hypothetically, any short position. It drops to go down to an inefficiency below market price. It's like a fair value gap or something like that, or opening range gap, something to that degree. Or it goes below old lows for sell stops. Either it puts a trader in short on a breakout going lower, or it protects long positions, hypothetically. Okay, so that's the only two mechanisms that causes price to go up or down. There's nothing else. There's literally nothing else that's going on. When they reprice manual intervention, they're still taking it to price levels that I just defined, but they're just going to do it farther outside the extreme normal range. They're doing it quicker, like that. And you don't many times get a chance to participate in those types of moves. And that's okay. You don't need them. You don't need those types of moves. There's plenty of other stuff out there to trade. So I demystified everything again for you. Price only goes up for inefficiencies or buy-side liquidity, or it goes down for inefficiencies or for sell stops. That's it. There's no other reason for price to go up and down. The buying and selling pressure, okay, a very interesting study. For those that are really trying to debunk the algorithm, okay, there is no algorithm. I'm out here to refute the ICT claim. Okay. Do a real in-depth study on the volume, how many contracts it took for price to move every single intraday price move. The largest one in the session, like in the morning, do it in the afternoon, okay? And see how many handles the prices traverse to do that. As soon as you start seeing how much it will move, and there's this wide disparity amount, how many contracts it takes. When I was being interviewed by Corbs, he's the only one I ever sat down and did a face-to-face with. The question I asked him was, how many contracts does it take to cause price to go up? Well, just one, right? Right. What happens when price has a goal? It's being inspired, let's say it that way, to get to a particular price level. It will skip. It'll create these little gaps, okay? And these gaps are what we are targeting, these little inefficiencies. Because if we're aiming for, like I outlined this week, I'm going to take all this stuff off. Just know that we have a lot of things to factor in here. If we go lower, it's going to be potentially spotty, because then we have all this back and forth in here. So it's going to take a real move to get through all this mess in here. We have volume imbalances. Like, this is a mess. Like, this is a lot of sloppy stuff in here. The cleanest price delivery was moving from here down into this inefficiency. That's why I said this ends it for me. I'm done for the week. If it touches this level here, which is where you saw my cover on my short, that's it for me. Because then what has happened is, to expecting lower prices, I'm going to have to weather through all these questionable levels. Can it go down there and smash right through it? Absolutely it can. Is it likely to do that? No. So am I trading with high probability if I'm holding on to my short? If I would have held on to my short, I would have been nervous with the non-farm payroll release. I would have been nervous after 9:30 opening, because I have all these other factors to start weighing out. Okay, should I hold on my trade? Should I not? Versus I know what I was looking for in the commentary and the analysis for this week. We were already eyeballing this. Okay. The low end of it, that's the best target. That's the best. So I have my limit order to get that, knowing that because it's Friday, it's non-farm payroll, it's going to be probably a little bit more animated. It may color outside the lines and go just below that candlestick's high. So that was me finessing. You can see me in the video adjusting my limit order, because I want to make sure I get the best factoring the spread. Okay. My original profit objective would have made me a couple $100 more, but I wanted to make sure that the spread touching this candlestick's high, when it trades down there, I want to be executed. I want to get those 14 contracts off. So if those 14 contracts get peeled off, I have to have a price level with that limit order to cover that short position that will afford me the opportunity to see 14 contracts clear. Just because it touches this level down here doesn't mean, like, say for instance, you get to a point where you're trading with 100 contracts. You have 100 cars on this run. If you're using a limit order, you may not get them all off. It might just say, no, it can't fill you. You want these 50 off at that price. I can't fill you. There isn't enough buyers on the other side at that price at that given instant that they're going to pair you with. Boom, there it is, it's done. So you don't get those exits. And then if it starts to retrace against you, like we've seen this morning, that's a little disenchanting. It's not fun. I don't like those types of instances. So there are times where it demands a little bit more humble exits. You have to be willing to say, okay, I believe it's going to touch this candlestick's high as it's dropping down, but I want to make sure I get out. Like, I want to get paid. I want my execution to, I don't want my funded account challenge or my funded account or my live account or whatever it is that you may be using in trading. I want to make sure that I get out. Just touching the level is not enough. But what you want to start doing is building in this mindset where you will expect that level of precision, but you don't need that level of precision to be extremely profitable with your exits. You know what I'm saying? So in other words, say whatever that price is, in this case, it's the high of that candle. Watch this up here, upper left-hand corner. 18,765.25. So what's wrong with trying to get out at 18,770? Oh, that's not precise. That's not precision. Why? You're telling me that if you were short and you had an open unrealized profit of, say, 50 handles, okay? Not like what I did, almost 360 handles. How about that? 18,770. Again, watch that price here. You're not getting 765 and a quarter with your exit. Not while you're trying to groom yourself into seeing these things pan out consistently. You want to be able to afford yourself an exit. So you expect to touch that level with price, and that's your moral victory. That's your trophy. And that's what you put in your journal. I'm pleased. I'm excited. I was so stoked to see price trade down to that level. It was amazing to see it drop down there and hit that perfectly. And you note the time and you put the little screenshot and you say, this is what it feels like for we're holding onto a trade and it pans out like this. But I'm happy and I'm comfortable that I don't need to have that level of precision for exits. I'm growing in my precision. So in this case, instead of getting 18,765 and a quarter as your limit would have to be 18,765.50. That is not much wiggle room. That is, and that's not a lot. Like you could very easily not get filled if it stops dead on its delivery at 765 and a quarter. How many contracts are going to be traded at that price with one tick variance, right? So if you went into it with the 18,770 level, did I just drop a level on there? Here it is. Say this is your price that you're trying to get. Like you can't even barely see it, right? It's not much of a difference. Look. And you're going to argue, say that's not precise enough? Come on. You have to trade with the expectation that you're trying to get filled too. So it's a management of all these concerns and expectations, but your expectation for precision and perfection, that needs to be relegated to your journal. Cheerlead yourself there. But in your trading, you have to afford yourself a common sense exit strategy. Okay, it's a low-hanging fruit threshold where you're not demanding that your exits are the best of the best of the best. I've missed out on some amazing exits, and I've missed out on some amazing like the top tick or the bottom tick of moves. I've had them in my grasp, but the spread denied me. It's exciting, it's exhilarating seeing it happen like that. I'm like, man, I had it pegged, but the fill wasn't there. So I can feel great that I had it dialed in, but I didn't execute properly. So I have to keep myself grounded with my ego and say, you're good, kid, but you're not that good. So and just allow yourself to operate in the market with your orders that will afford you the luxuries of getting in and getting out. You're going to have a whole lot more liquidity from 770 down to 765 and a quarter. There's lots of prices in between there, lots of individual tick fluctuations, and every one little minor little fluctuation is an opportunity for an exchange and pairing of orders for buyers and sellers to meet. And you want to afford yourself an ample supply of that when you're trying to exit, and just yield yourself to, yeah, it went to where I wanted it to go, and I'm happy with that, but I don't need that. Hopefully that makes sense. I've answered a dozen of individuals that left comments around struggling with exits and how to pick the right price and all that, because they're trying to impress me and they're trying to impress themselves. Knowing where it's going to go to with the perfection, that is just for you to feel good. That's not how you're going to execute. If you try to do that, you're going to miss entries, you're going to miss exits, and or hold on to them because you want them to hit that level with your exit, and then the price could be returning against you, and you are more fixed on the outcome being perfect versus recognizing that you're in a trade now that's turned around on you, and you've married the vein. Okay, gold miners used to have the expression, so and so's married the vein. In other words, the location that's been mined for gold, it's dried up now. It's no more gold there. But because he's found one little nugget there, he's married the vein. He thinks it's going to be nothing but more gold. So he spends his time constantly digging and panhandling through there, getting nothing but wasted time. So you can do that with your winning trades. You can turn a really good trade into something that's dog mess, really. So we're below. I just want to put these on here before I leave this time frame. I hope what I'm saying is encouraging and not discouraging you. But I know sometimes you want to be like an X-Man. And remember, Deadpool wasn't an X-Man. Deadpool, spirit animal. All right, so anyway, that's the levels I'm using going forward. So we'll keep those in mind. But this fair value gap is what I was mentioning this week. That was all I was looking for. Me personally, as the trader, ICT, I'm not interested needing it to go lower than that. Can it? Absolutely can. But I don't personally need that. So where do I want to engage? I want to engage in anything that gets me short. So how can I do that? How can I frame a short in a market that has had this big colossal slide down, where I had some of the back end of that move, but I didn't get the first part of it there because it's coming on the heels of what? A holiday. So I'm going to let the morning session trade without me. And at 1:30 p.m., that means the New York hour lunch, which is technically 2 hours, 11:30 to 1:30. In that time frame, that is when the lunch macro, whatever has happened in the morning session, during those 2 hours, there's always some kind of retracement against whatever's already happened in the morning. That is all the lunch macro is. That's it. It's all it is. It just retraces on orders that would be trailed up if it's been going higher, or if it's been going lower in price, they trail the stop losses lower to lock in their profits. During the 11:30 to 1:30, they're very, very specific times. Don't take my word for it. I want you to go back, and every single time you log intraday price action, make a vertical line at 11:30 and a vertical line at 1:30, and then watch what price is doing in those 2 hours. It does it so frequently that could be your model. That could be your thing. Like, you don't even trade. Don't even worry about trading the open. Who cares about that? Whatever somebody's been doing, they were smart. They did something right. They were long in the initial run of the move, or they were short in the initial run of the move. During that 11:30 to 12:30, 11:30 to 1:30 p.m. Eastern Standard Time. That means always have your time on TradingView set to New York. If you're using your local time, you're doing it wrong. I don't care who tells you what. I don't care where you live. I don't care. You're not following what the algorithm's going to do. You're not following the logic I'm teaching with, and you're not going to be successful because you're doing things wrong. Okay, so you have to always have your chart set to New York local time. And at 11:30 and 1:30, that defines your lunch macro time. But at the end of that, at 1:30 p.m. Eastern Standard Time, that starts the afternoon session. So that's your first 30 minutes leading up to 2 o'clock. In that first 30 minutes, you're going to see fair value gaps form. You're going to see other PDA. Don't think that my fair value gap in the first 30 minutes of 9:30 to 10 o'clock, like that's the only one trick pony. Every single one of my PD arrays exist in that same element too. Remember, I'm just teaching one principle, one little component. Breaker blocks, vacuum blocks, propulsion blocks, institutional order flow, entry drill. Technically, it's still kind of fair value gap. Every PD array is in there. Volume imbalance. If it forms the first one, it's the same premise. Oh, explosion of opportunities just came in, didn't it? See, you think it's just a one-trick pony around here. Honey, listen to me. I have an arsenal. I have stuff nobody's seen before, but you are selling yourself short thinking that you don't have enough already. Like you have more than you would ever need. I don't never need to do anything else ever again talking about none of this. You have more than enough. But I know how it is. You want more. And I love Sharon. I love Sharon. I love my wife more. Her name ain't Sharon, but I love Sharon. And I love the feedback that I get when people are like, wow, I use this. I went right out there and I saw in price action and look what I just did. I tape read this and boom, 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 and there it is. What I don't want you doing, and this is what I'm seeing in the comment section. There's one individual that's saying, I hurt myself. I made $1,500 and then I lost $1,000 in the next day. And please encourage me. Every video I'm encouraging you. I'm encouraging all of you to follow the rules. If you're taking what I'm doing in a lecture, okay, I mean this. If you're taking what I'm teaching in a lecture that given day or the very next day and you're trying to go out there and trade with it with your real money, with your funded account challenge or your funded account, you are doing it wrong. I know that the tendencies for you to want to just go out there and prove that it's going to make you money. And if it does, man, you're going to be ICT for life. I don't want you ICT for life. I want you incorporated for life. YOU, incorporated. You, the enterprise, this conglomerate that you're building, you as a success story. I want you to be that for life. I don't want you Team ICT. Team ICT is nothing. There's no ICT team. I'm a one-man army. I'm training you all to be a one-man or woman army. That's it. You don't need anybody else. You don't need to plug in anybody else. You don't need any other kind of resources. You are capable of doing everything by yourself. Once you learn this stuff, no one can take it from you and they can't discount it. Who's going to say you can't do what I'm doing or more than I'm showing? Nobody. Just you. But stop trying to go out there and try to use it right away. You haven't spent enough time. Listen, we just started doing mentorship. It's only been a month. And some of you think that that's, well, you're too long in it now, man. I should already be out there trading with it. That's a moronic perspective. That's dollar menu mentorship, mentor advice. I'm not telling you to do that. I'm not telling you to do that at all. I'm telling you to do the opposite. Sit still. You shouldn't even be taking any trades with real money this year. This year. That's the reality. And if you don't like that, don't watch my videos. I mean that because I don't like when you leave comments, and I'm not getting a lot of them, but I'm getting them. I tried to use this and I lost money. Can you tell me what I did wrong? You started using it before you understood how to use it. Just like I did when I bought my ZX14 in 2008. That was the fastest motorcycle. Fastest one. I've never owned a motorcycle before. Midlife crisis. I'm 35 years old. Hey, you know what I need to do? I need a rocket. I got everything else I need. I don't need anything else. But you know what I need? I need a rocket. So I bought it. And a year later, on March 9th, 2009, at 1 o'clock in the afternoon, I should have died. And now my body hurts every single day because I did something impulsively, recklessly, buying and operating something that I didn't have the skill set to do that. And you don't have the skill set to use this information yet with real money. With real risk, you don't have that experience. And I didn't want to pull up the next somebody at a light and say, dude, the 600, look at you. I didn't want that feeling. So I told myself, I'll be responsible. I won't drive it fast. Deep down inside, I couldn't wait to go 200 mile an hour. Couldn't wait, right? So, and it wasn't but 3 weeks later, I'm doing 155 miles an hour on Pulaski Highway in front of Oak Grove Liquors going north to Aberdeen area, going that direction, away from the city, basically in Baltimore. 155 mile an hour in an area where there's multiple intersections. People don't even stop at the stop sign. And I was chasing after a pony boy in a Mustang that was encouraging me. And that was Satan. I knew that was. He was trying to get me to chase, and I did. I was right on his bumper. And then all of a sudden, reality hit me. I started feeling like my stop loss is about to get ran. And my body started shaking. And I realized that if this guy was suicidal or nuts and he slams his brakes and brake checks me, I'm dead. And then if that wasn't enough, they're doing construction down the road in front of me, and all the cones that are luring us over into the left-hand lane, all this is happening instantly. I'm getting all this rush of information inside of a window of visibility of 5 inches. If you've ever been over 100 and some mile an hour on a motorcycle, you get this tunnel vision. And it's exciting, it's exhilarating. But you can only see about 5 inches in diameter. If you hold your hands out in front of you and connect your thumb tips together and your index fingers and try to make that in like a perfect circle at your arm's length, that's all you see when you're going real fast on a motorcycle. Everything else is like warp speed blur. And it's weird. Like you can watch these guys on YouTube and they're going real fast and you see everything. It's like, wow, this is great. That's what I did. But it's altogether something different. The first time you experience that warp speed tunnel vision, it is scary. Like it's very, very scary. And the only thing I could see in that little tiny little diameter was this young boy looking in the rearview mirror, giving me the hang loose, shaking his thumb and pinky at me like, yeah, go. And I started panicking. I literally had a panic attack on the motorcycle. I was literally gripping this thing. I pulled a groin muscle nearly, just trying to keep myself holding on to this motorcycle. But I didn't want to look weak in front of him. I didn't want to look like I didn't know what I was doing. But I was scared to death. And I started realizing I'm so fast, you just can't stop a motorcycle. Like you have to learn how to navigate around things because stopping is not always the best solution because you just can't stop. You don't have enough weight to bring you to a stop. So all these things came up in my mind. And you're probably thinking, what's this got to do with trading? It has everything to do with what you're doing wrong. I should have never been in that situation 3 weeks after buying the ZX14 Ninja, Kawasaki Ninja in 2008. 3 weeks after buying my first motorcycle, I'm at 155 miles an hour, ready to become a statistic. Stupidly. Chasing after something that was all wrong. What was I doing there? I was looking at an influencer on the road, just like you're watching influencers like me and other people on the internet. Wow, that Mustang boy thinks he's fast. Watch this. I'm going to go smoke him. I'm doing everything for the wrong reasons. And I'm opening myself for risk. He's not at risk. He's inside of his car safe. He's got better brakes. He has the ability to stop better than I do. And I'm literally one front wheel width away from his bumper, staring at him in his rearview mirror through his back window. With no skill. I have zero skill. None at the time. None. Thank God he struck me with fear because I was literally like, okay, I'm coming off the acceleration. And I literally wanted to throw up. Like I was scared. Like I was genuinely scared to death because I was being piped into one lane and the lanes were already stacking up ahead of him. And I don't have much time to bring myself down in speed. Downshift, downshift, downshift. And I get up to the light. And of course, you know me, I'm a man. He pulls up next to me. He's looking at me. Yeah. He rolls his window down. And I got my visor down. He can't see me. I'm panting and I'm shaking. So what I do the old cool biker lean. I put my hands on my leg and I put my hands on the tank and I'm pressing my arms down on the tank because I don't want anybody seeing I'm shaking. I'm scared to death. I'm hopped up on goofballs, adrenaline, and fear. And I'm thanking the good Lord that I did not become a pink missed. I would have came apart at that speed. It would have been a closed coffin. And my uncle, who was like my big brother, September 4th, 1979, at noon that day, he took me for a ride on his motorcycle. I could still smell his sweat on the back of his t-shirt, holding on to him. And it was the coolest moment ever. And 12 hours later, he died on that same road, not just a quarter mile from where I was at that moment. And it all hit me at that time. And I was like, okay, I can't even take it anymore. I'm gonna turn right and I'll go down Middle River Road. I'll go that direction. I just got to get off this highway. And I literally took my ass home. And I sat there and I thought to myself, man, I could have died doing something stupid. I could have done something really, really dumb. And here's the thing. I survived that. I knew better not to do it again, but a year later, my first ride of the spring, March 9th, 2009. It's a good day out here. I'm going to go take my bike out. Let it run for 20 minutes. It's been sitting. Get out there. Boom. Open it up. Wham. And an old guy comes in and puts me into a curb. And I fly 50 mile an hour over the handlebars, 85 feet in the air, land on my head, break my clavicle 2 places, break 3 ribs, detach my scapula, crush all of my molars in my mouth. All of my molars, all of my chewing teeth are crushed. I should have been dead. And I have spinal injuries as a result of that. I didn't learn my lesson. I was given grace. I didn't learn my lesson. I figured I've been driving for a year now. I've been riding for a year now. I haven't really been ridden for a year. But I allowed my impulses because I saw other people riding around that day. I was like, you know what? I'm gonna take my bike out. And I was influenced by other people that are doing things recklessly too. And that's exactly what you're doing when you watch my content or anybody else's content. You're thinking, I want to do what they're doing. I want to have that same fun. Wow, that must be really cool. They're trading with 20 accounts. They got $10,000 payout. They got this, they got that. ICT just did a $100,000 trade over here. What if I did that with 20 accounts? I could be this and that could be that. Don't let me influence you like that. Do not let me influence you like that. That's not what I'm here for. I'm here to remind you what's possible, but you're going to work your ass off to get to that level. And there's no reason to take stupid high-level risks. I would have left my family behind the year before, but thankfully God said no. And because I didn't listen, he didn't give me anxiety on that second ride. He let me have all of it up to the point of almost death. And he has, still to this day, every spring, I see other motorcyclists out there, and I always have the itch. Like, I'm thinking to myself, I can get one. I'll get me one of the cruisers. And as soon as I start feeling that way, boom, my back goes into major spasms, and I have it for weeks. That's the Lord telling me, you're stupid. You're being stupid right now. How many times I gotta keep you from doing this? That's a natural human tendency. Don't walk on the grass. I'm moonwalking on it. That's what we do as humans. We do everything we're not supposed to do. That's why everybody fails in this industry, because it's so hard to keep control over yourself. And then you have social media, people like me and other people out there that are telling people what they do, what they can learn from you, whatever. Do not let me influence you to do things ahead of schedule. That's why I tell you all the time, take your time. There's no rush. These markets are still going to be trading 6 months from now. Just relax. If you don't give yourself the ability to see it properly, you might become that pink mist and you're gone. What can you do about it then? Nothing. You've wrecked yourself. You lost more money. You'll never probably want to trade ever again because you did it wrong. But you'll think that this stuff doesn't work. And that's exactly what these people do on the internet. They tried to do something quick with it, or they thought it was going to be 1, 2, 3, watch a video in 5 minutes. Oh, it works because I can prove it in 5 minutes. No, it doesn't work like that. So my encouragement to you, young man, is stop trying to use it right away. You don't know what you're doing. Just like I didn't know how to use all that speed and power in 2008 and in 2009. And ultimately, it could have ended me. So while I still love bikes, I love them, I can't buy one and I can't ride one because I'm afraid that I won't have the outcome that still keeps me here. And I live with pain chronically every single day because I did not listen to good common sense the year before. I should have got rid of the bike because I wasn't able to compose myself and be responsible as a rider. I was literally, a squid. I was out there with not the proper equipment, speeding around with no skill, doing dumb stuff. And I watch kids every single week in our area end up on the news because they do that same stuff. They're influenced by their friends and people online or whatever, and they buy bikes they can't handle it. And what you're learning from me is faster and powerful than that ZX13 was. Faster than a Hayabusa, faster than all that stuff. This stuff is rocket science. And you're out there trying to treat it like it's checkers. Oh, I'm going to go out here and it's all I got to do is this, this, this. And I'm like, no, you have no idea. And that's why I teach the way I do. My concepts are amazing. They're perfect. They're the market. But if you don't have the right mindset or control over yourself, you'll hurt yourself. And I'm ICT, and I just told you something about my personal life that as a human being, I abandoned the rules that I live by. I saw something, I was influenced by other people. I want that bike. And I went to the shop and said, what's the fastest bike right now? That's what I asked for. I didn't say, can you give me something as a new rider? That was not what I asked for. I want the fastest, what everybody wants right now. That's the bike I want. And I walked out there with cash, boom. And I drove it home, brand new tire. Listen, for people that ride bikes, you know how stupid this was. I didn't leave it there and pick it up the next day because it was thunderstorming. And I drove it home in the rain. And I had people laying on their horns behind me because I knew the wrong little movement, I'm probably going to go down with this thing because brand new tires are too smooth. And you're going to hydroplane real easy. And I drove home in a thunderstorm with probably a mile of cars behind me. Some of them went around me and beat the horn, almost cut me off just to show me how they're mad at me. But I was doing everything wrong about being a biker. Everything wrong. I checked every box. Now I live with pain. You can hurt yourself financially beyond your comprehension if you do things wrong. You could owe more money than you have trading in environments like a CPI or PPI number. Say you're ahead of it and you don't know that it's coming out in the marketplace and you're short and then they